Welcome, curious minds, to another deep dive.
Good to be back.
Today, we're taking a look at the recent financial results from one of India's biggest consumer goods companies, Hindustan Unilever Ltd, or HUL.
Yeah, eat you well. They're everywhere.
Absolutely. And, you might be thinking, quarterly earnings, why should I care?
Hey, fair question sometimes.
But this isn't just about dry numbers, really. It's a fascinating look at what's happening on the ground in this huge market.
How people are spending, what's changing.
And the innovations driving the products you probably use every single day. We've got the fresh reports, the investor presentations, even the full earnings call transcript for the quarter that ended June 30th, 2025.
All of raw material?
Right, so our mission today is to, well, cut through the jargon, pull out the key insights.
And really explore what these results tell us about the economy, consumer trends, and the future of this whole FMCG sector.
Think of it as your shortcut, your inside look at a market that affects millions.
And what's really interesting here, I think, is how HUL operates in what they call many Indias.
Right.
And their recent shift in reporting gives us a much more holistic view. They're leading with a consolidated perspective now, meaning it includes 7 key subsidiaries, even the newer ones like Oziva and Minimalist.
The digital acquisition.
Exactly. It reflects their bigger strategy. This portfolio transformation they talk about gives a clearer picture of, their strategic bets.
Okay, let's unpack this then. Before we get into HUL's specific numbers, what's the general economic situation they're working in? What are the big factors at play?
Well, if you connect it to the bigger picture, there are actually several pretty favorable macroeconomic things supporting consumption demand right now.
Like what?
Okay, so the Reserve Bank of India, for instance, they've cut the repo rate by 100 basis points since January 2025.
So 1%, more money flowing.
Exactly, more liquidity.
Yeah.
And retail inflation, mostly food prices, it's moderated quite a bit, down to 2.1% in June, lowest since 2019.
Wow, okay.
Add in some recent income tax relief measures, and that should help disposable income, consumer sentiment.
Makes sense.
And, the Indian Met Department is forecasting an above-average monsoon.
Which is always good news for rural demand.
Absolutely. Right? Bodes well for the rural economy.
So, mostly tailwinds then. But are things, uniformly positive? Or are there nuances?
There are always nuances. Consumption demand trends, looking at the last 3 months, they do show improvement sequentially.
Right.
But if you look at the full year, the MAT level, the environment's been more stable than, say, booming.
Right. Not a huge surge yet.
Exactly. And rural demand is still growing faster than urban, even with e-commerce included. That trend's been consistent.
Interesting.
And on commodities, raw materials, it's a mixed bag year on year, but sequentially, things seem to be softening a bit.
Which impacts their pricing.
Yeah.
We'll get to that, I'm sure.
Definitely. It's a key part of the story.
Okay, so with that backdrop, how did HUL actually do in Q1 FY26? Give us the headline numbers, maybe decode some jargon.
Sure. So on a consolidated basis, remember, including those subsidiaries for the quarter ending June 30th, 2025.
Right.
They reported underlying sales growth, USG, of 5%.
Okay.
And underlying volume growth, UVG, of 4%.
So 4% more stuff sold, basically.
Essentially, yes.
Yeah.
Volume driving most of the sales growth, not just price hikes. Their turnover was 16,323 crores.
Big number.
Huge. About $1.96 billion US dollars, roughly. Now, their EBITDA margin was 22.8%.
Which is down.
It is down, yeah, by 130 basis points year on year. But importantly, this was expected. It was in line with their guidance.
Why was it down?
Primarily due to increased investments back into the business. A deliberate choice.
Right, those strategic bets you mentioned. Okay, so margin down. How did that hit the bottom line, the profit?
Good question. Profit after tax before exceptional items, PATB, that actually declined by 5%.
Okay, so the core operating profit dipped.
Correct.
Yeah.
However, their reported profit after tax, PPT, that went up by 6%.
Huh. How does that work?
It's mainly due to a one-off impact. They re-estimated some tax provisions for prior years.
Accounting thing.
Basically, yeah. It gave PAT growth a 12% boost. So strip that out and the picture changes.
Got it. What about just HUL itself, standalone?
Standalone, USG was 4%, UVG 3%, and PAT growth was 8%. And despite the margin pressure, they did consistently gain market share, weighted by turnover.
Okay, so gaining share even with those deliberate investment choices impacting margins, that sounds like a strategy.
It definitely is. It reflects this ASPIRE strategy framework they talk about.
ASPIRE.
Yeah, it's their acronym for accelerating portfolio transformation, pivoting investments to new demand areas, getting their capabilities future-ready.
And sustainability is in there too, right?
Absolutely. Underpins the whole thing. It's really about being agile, making focused bets, not just trying to do everything equally.
So how is that portfolio transformation actually playing out? What does it look like in terms of their products?
Well, they've segmented their portfolio quite rigorously. Less than half is now classed as core.
The traditional stuff.
Yeah, the established mainstays. Just over half is now split between future core and market makers.
Meaning?
Future core are areas with strong growth potential. Market makers are newer, often disruptive categories or formats.
And they're shifting investment towards those.
Exactly. They've moved about 500 basis points, so 5% of their focus, towards future core and market makers in the last 2 years.
That's a significant shift.
It is. And they're backing it up with digital spend. Over 50% of their media spend is digital now.
Wow, up from
32% just 2 years ago. They're using proprietary tools like something called SUM for real-time optimization.
so very data-driven.
Very much so, adapting fast.
Okay, let's dive into the segments then. What happened in home care? You mentioned investments there earlier.
Right, home care delivered 4% USG, but that was driven by high single-digit volume growth, UVG.
So prices went down.
Yes, negative pricing. They passed on some commodity benefits and stayed competitive. Smart move to protect volume.
Makes sense. What were the highlights?
Fabric wash, led by Surf Excel, grew volumes mid-single digits. Household care, especially dishwash, saw double-digit UVG.
Dishwash is booming.
Seems like it.
Hmm.
And their liquids portfolio across categories kept up its double-digit growth.
Any interesting new launches?
Yeah, a couple. Surf Excel Matic Express, designed for those quick wash cycles on washing machines.
Huh. Everything's getting faster.
Apparently. And they relaunched Vim Pro Clean Liquids with something called Ramnotech. Supposedly makes dishwashing easier.
Okay, sounds high-tech for washing up liquid. How about beauty and well-being? That's a hot area.
It is. They delivered 7% USG, but with low single-digit UVG. So price and mix played a bigger role here.
Right.
Hair care grew mid-single digits. And in health and well-being, Oziva, that brand they acquired, saw massive acceleration. Tripled its turnover year on year, grew from a 50 crore annual run rate to 150 crores just this quarter.
Wow, that's huge growth for an acquisition.
Really significant. Shows the potential in that space. They also launched more prestige stuff, Nexus Hair Care, Dove's Peptide Bond range, more Lakme Retinol.
Pushing into premium.
Definitely strengthening that future core and market maker end. Oh, and Glow & Lovely had a better quarter too, helped by new Glass Beauty innovation.
Glass beauty, okay. And personal care, soap, deodorant, that kind of thing.
Personal care grew 6%. Here, pricing was a key driver due to some commodity inflation.
So input costs went up.
In some areas, yes. Skin cleansing grew mid-single digits, but premium soap bars saw double-digit growth.
People trading up even in soap.
Seems that way. Body wash also continued strong double-digit growth. Very competitive market.
Relaunches there too.
Yep. L'Oreal got refreshed packaging. They launched a new Dove Serum Bar range, and Close-Up toothpaste got an enhanced formula. Zin Fresh technology, promising 18 hours of freshness.
18 hours, okay. Lastly, foods.
Foods delivered 5% USG with mid-single-digit UVG, so a mix of volume and price mix.
What drove it?
Beverages, tea, and coffee grew double digits. Coffee especially strong, mostly price-led growth there. Lifestyle nutrition, think Horlicks and Boost, held its market leadership.
And stuff.
They launched a red label instant spice tea mix, and Boost protein and adult protein drink, clean label, high protein, zero added sugar.
Targeting the health trend again.
Clearly. Ice cream grew high single digits, volume led, but
What?
performance was hit a bit by the early rains. Always a risk with ice cream.
Right, weather dependent. Now, you mentioned pricing strategy and margins earlier. The CFO apparently discussed this. How are they balancing that? It sounds tricky.
It is tricky, and it's fascinating how they're managing it. Gross margin was 49.5%. That's down 190 basis points year on year.
Nearly 2 percentage points. That's quite a drop.
It is, but it's largely deliberate. Reflects those choices to keep prices competitive, sometimes even letting pricing trail behind the rise in their material costs, the NMI.
So absorbing some cost increases.
Yes, in specific areas. They highlighted 3 examples. First, home care.
Where prices went down.
Right. Not just because costs fell, but also proactively responding to competition, strengthening their position.
Okay.
Second, tea. Here, they priced based on replacement cost, not consumption cost.
Raining.
Meaning, even though the tea they were using might have been bought when prices were higher, they priced based on current lower market rates to keep volumes up.
So taking a hit on the margin for that specific batch to keep customers buying.
Essentially, yes. It helped them get high single-digit sales growth and positive volume growth in tea.
Smart, but requires deep pockets.
Yeah.
And the third example?
Horlicks. They made changes to encourage people to buy bigger packs, narrowed the price gap between sachets and the large jars.
To get people to trade up?
Exactly. Accelerate pack upgradation, which is usually better for margins in the long run.
So it really does look like they're playing a long game, taking short-term margin hits for market share and future growth.
Precisely. It's a strategic sacrifice. They expect gross margins to improve sequentially going forward, though. Combination of things. Narrowing that price-cost gap gradually, driving cost savings through their productivity programs, and improving the product mix, selling more higher-margin stuff.
But they're not just banking the savings.
No, they were clear. They plan to reinvest the benefits from margin improvement back into the business.
Fueling more innovation, market development, digital.
Exactly. It raises that classic question, how much short-term pain for long-term gain? They seem willing to accept quite a bit right now.
Okay, shifting gears slightly,
Mm-hmm.
beyond the quarterly numbers, some big structural things are happening. The ice cream demerger, what's the latest?
Yeah, that's moving forward. They've received the no objection letter for the demerger.
What's next?
The National Company Law Tribunal has ordered a shareholder meeting for August 12, 2025. Voting starts August 7th.
And the plan is still a mirror demerger.
Yes, one share in the new company, Quality Walls India Limited, for every HUL share held. Designed to unlock value, give shareholders flexibility.
Timeline.
They're aiming to complete it by Q4 FY26, so early next calendar year.
And the minimalist acquisition. That's done now.
Yes, closed on April 21st, 2025. They acquired 90.5% of Uprising Science Private Limited, the company behind Minimalist, for 276 crores.
And how's it performing?
Already showing strong double-digit growth this quarter, according to HUL.
So integrating well?
Looks like it. HUL and the founders are working on synergies, R&D, supply chain, international expansion, and getting it into physical stores, too.
How do these digital-first brands, like Minimalist and Oziva, fit into the bigger HUL machine? Is it just about adding revenue streams?
It's more than that, I think. There's definitely value in bringing in these agile digital native brands. That whole digital-first beauty and well-being portfolio is now 3,000 crores,
Wow.
growing over 25% with good margins. But there's also this reverse learning idea.
What do you mean?
HUL is learning from the speed and digital strategies of Minimalist and Oziva, applying those lessons back to their core mainline business.
Interesting. So the acquisitions teach the parent company.
Yeah, in areas like digital marketing, consumer engagement, it's a two-way street.
And speaking of change, there's a big leadership transition happening too.
Yes, significant news. Rohit Jawa, the current CEO and MD, is stepping down after a very long career with Unilever, over 37 years.
And the successor?
Priya Nair. She's got over 30 years with HUL and Unilever, most recently as president of the global beauty and well-being business.
So someone with deep company and industry experience.
Very much so. Her global perspective, especially from beauty and well-being, will be interesting to watch as she takes the helm.
Definitely a major change. So putting it all together, the performance, the strategy, the changes, what's their outlook? What are they guiding for?
Well, their overall growth guidance hasn't changed. They still expect the first half of this financial year, FY26, to be better than the second half of last year, FY25.
Okay. Modest improvement expected.
Yes. And they anticipate low single-digit price growth, assuming commodity prices stay roughly where they are now.
And margins.
Committed to that sequential improvement in gross margin to fuel reinvestment, they're sticking to an expected EBITDA margin range of 22-23%.
So holding steady despite the investments.
That's the goal. Sustain the investments in future channels, market making, new capabilities, while keeping EBITDA in that band.
And the main focus remains.
Driving competitive, volume-led growth, and continuing that transformation into higher growth spaces, staying ahead of the curve.
Wow. Okay, that was a really thorough deep dive into HUL's Q1. A lot going on beneath the surface.
Absolutely. From those subtle shifts in consumer demand, the economic factors, to these really quite bold strategic moves on portfolio and digital.
Yeah, it's definitely not just about selling soap and tea anymore.
Not at all. And it makes you think, doesn't it? As the market keeps changing and companies like HUL place these big bets, it raises a question maybe for you listening. How do your own choices, what you buy, why you buy it, maybe driven by convenience or values or some new innovation?
How does that shape what happens next?
Exactly. How do our collective decisions feed into the next set of financial results for these huge companies? What categories do you think will boom next year? Why?
Food for thought. We've gone from macroeconomics right down to Ramnotech in dish soap.
It's all connected.
It really is. Well, thank you for joining us on this deep dive. We hope you're leaving with a clear picture, maybe some new questions.
Hope so.
Until next time, keep digging for those insights.